Hello, hello, hello. How's it going, everybody? Good morning, good evening, good night, depending where you are in the world. Welcome to a Capital Hungry Market Analysis and Trade Ideas webinar. Through the next 30 to 40 minutes, potentially even an hour, depending how long I start ranting off for, we're going to be breaking down what's going on in the financial markets, but more importantly to the trading instruments that we analyze and actively trade every day. And we're going to be giving some trade ideas, both intraday and scalp trade ideas on gold, GBPJPY, GBPUSD, EURUSD, USD Cad, US 30 stock market index, as well as analyzing market sentiment, what economic events we have on the table, news, fundamentals, and all of that jazz. I heard you all missed me. I know I was MIA for a week. I had some medical issues I had to handle of my own, but I'm back now. I already posted a 1-minute breakdown on GJ yesterday for the short attention span audience, and it played out. If anybody took the if anyone took the 152.5 buys, or sorry, 151.5 sells. I was looking at GU for a second. If anybody followed that GJ 1-minute breakdown, the sells played out yesterday as well, and those are pretty much active still. But anyways, let's jump right into it. Let's get into the meat and potatoes. Let's get into what everybody is here for. Okay? So, number one, let's just go over some key events that took place over the day. And that is some important reminders and overall just some interesting news to understand. So, we can clearly see that the Russia tensions are not slowing down anytime soon. We can see that NATO is continuously reviewing defense posture, including looking at questions of more permanent deployments, of course to support Ukraine. Russia's Nebraska, the world in Russia will never be the same after these events. Ukraine's infrastructure minister says the war damage to the country's infrastructure as of Sunday breached $10 billion. Also related to the cryptocurrency markets, this was just later in the day, but Joe Biden, president of the USA, of course, is supposed to sign an executive order on cryptocurrencies sometime this week. So for all of the crypto traders out there, expect some uncertainty, expect some volatility regarding your crypto holdings, whether you're a day trader or investor. That will obviously bring some tensions if they look for any regulations and so forth. But the main meat and potatoes we're focusing on is, of course, the Russia and Ukraine tensions. What we're seeing with the Russia and Ukraine tensions is that it continues to escalate. The invasion is not slowing down at a physical front, so we're seeing more deaths occur in Ukraine, which is obviously a terrible thing. Because of this, the other NATO countries are still putting some more pressure on Russia by further adding more economic sanctions. I'm pretty sure Trudeau met up with Boris Johnson in London today. Two retards met up and put on some more sanctions on Russia that Putin could absolutely not care about. And for those of you who don't know, I did a breakdown on this 2 weeks ago, literally just talking about Russia versus Ukraine war. And on my Twitter, I did a podcast about this. Both are saved. This situation we are seeing right now, actively right now, right? It's been going on and previously happened during 2015, 2016, when Putin was first invading Ukraine back then for the Donbass reasons. And what we saw obviously occur was the same type of timeline. We saw the invasion take place. We saw other NATO regions and other countries condemn Russia. There were economic sanctions put on Russia. And at the end of the day, those economic sanctions, if you guys go research it, actually ended up costing the Euro, Canada, and America more than it did anything to Russia at all, right? So we're seeing a very similar situation in the modern day now, in the modern time. Even when Russia raised their interest rates, the Russian central bank, to 20%, which is obviously a monstrous increase, and everybody was shocked, that's nothing new. They did that again. They did that before, in 2015, and they did it again now for the same type of situation. But anyways, in terms of what we need to understand as day traders, scalpers, and so forth, is obviously the majority of us are trading pairs like GJ, GBP USD, or dollar pairs, or you're trading something like gold, a precious metal safe haven. So these fundamental catalysts that bring market fear is going to obviously impact what you're trading from an economic and fundamental perspective. So macro market fear is still holding strength, with primarily the strength in liquidity going into the US dollar, the Japanese yen, safe havens such as gold, the Swiss franc, and we can see a decrease in the value in equities across the board. So the market sentiment is clearly more on the fear side. Anybody who voted optimistic, I really feel bad for you on the poll in the YouTube chat. But it's very easy to see right now, as we're nearing inevitable rate hikes by the central banks, which is not good for the equity markets. And obviously the smart money investors absolutely hate that. They want to keep the greed train going. And of course, as we have these active invasion tensions, we're seeing that fear, uncertainty, and doubt, and smart money, the market makers, the whales, primarily moving their funds over to the safe havens to hedge against the market risk. Okay? So the main takeaway points is the main fundamentals we're focusing on is the Russia tensions. Of course, still keep an eye on central banks and their monetary policy, as the majority of central banks are on a hawkish tone, raising interest rates, or they already have raised interest rates. And continue to watch your headlines if we get any further escalations with these tensions. But overall, markets are still in fear mode. US dollars holding more strength. Yen is still holding strength on the intraday timeframes and failing to break a key higher timeframe support area. Equities are bearish, gold is bullish, and we can see risk currencies overall, like your GBP, your euros, you're a lot weaker, you know? So before we jump into the analysis now across the board, we just have to understand what economic events we have on the docket. Honestly, these economic events are not going to have too much of an impact on the charts. They may have a quick little lower time frame blip impact, but these reports are not too important when you're looking at the 2 a.m. Eastern Germany industrial output report, which will obviously impact euro pairs. That's not too important. At 5 a.m. Eastern during the Asian session close, we do have the euro quarterly and yearly GDP figures. But honestly, that's still going to be relatively just a short-term move, possibly to set up better sells, as the overall market sentiment of fear is holding more weight. So when you're looking at your dollar pairs, the US dollar strength is very clear, because whenever there's war tensions, especially you have the Feds also raising interest rates and on a more hawkish tone, this is all bullish factors for the dollar. But these are the economic events we have on the docket. 2 a.m. Eastern Germany industrial output, 5 a.m. Eastern Euro quarterly and yearly GDP, 8:30 a.m. Eastern US international trade balance data. Okay, now let's look at gold here. Obviously, as market fear has been a lot higher, gold has been in a beautiful bullish trend with buyers in control. All we've seen is buyers consecutively print intraday higher highs, and then as the Russia tension started to escalate further, we had much stronger increases in volatility and much larger moves overall. But what we can see is still being maintained is the integrity of the bullish market structure. That's just what we observe technically as manual retail traders. What this tells us about the order flow behind the scenes is that the buyers are in control. You're only seeing buyers enter the market here from favorable lower price points, right? Extend you up into new intraday highs where you see some potential profit taking from those intraday highs or previous price sensitivity areas. And when that profit taking occurs, you'll have these minor pullbacks where the pullback is just the transaction of buyers taking profit, sellers jumping in hand to relieve them out of the market, pushing price down to a more favorable demand zone, and still continuing up with the overall trend, right? Even any of the aggressive pullbacks we had, were in relation to the fundamentals at play and the volatility at play. For example, so you can clearly see buyers in control, bullish market structure, bullish trend, whether you like to see that as a trend line, EMAs being supported, higher highs being printed. I see buyers continuously extending the price of gold to the upside because that's what's really going on and how they're making their money, right? And some of these aggressive pullbacks that we saw previously were shaking a lot of people out of the market, but they're not able to adapt to the changes in volatility that come in with fundamental catalysts. For example, this is when Russia actually first started to invade Ukraine and take some physical action. And we had that huge burst in gold over that daily period from those like 1830 lows all the way into the 1880s. This aggressive bearish candle here and pullback and that next following downside move can really shake technical only traders out of their bias, but they don't understand the transaction between buyers and sellers. You still have to understand that buyers went to go print a high due to those tensions increasing in market fear. You have this pullback occurring, which is buyers taking profit at new intraday highs after making money from entering their buys from a more favorable demanded price point, and they make a profit on that increase in change in price. For them to exit out of the market, there has to be sell side liquidity on the other side. The sellers jump in hand to relieve them out of the market, but that just pushes price down to a more favorable demanded price point for more buy orders to be collected institutionally and continue the overall trend. Here you have more of an order block and consolidation where buy orders are collected and you continue with the overall trend. This is another great example. Here is when you had obviously Russia further escalating the tensions and the invasion and a lot more casualties and other NATO countries getting involved in the economic sanctions, and you had this huge burst in price and an equal correction that came down to that same demand zone and previous highs to retest around that area, right? The reason for this huge upside move was that fundamental catalyst of fear, but the following day Joe Biden said during this situation on the 25th there, the 24th and 25th, Joe Biden said that he will not be sending U.S. troops to Ukraine. They'll be doing economic sanctions, but the U.S. will not be getting their personal military involved yet. That de-escalated the situation on that day. Again, new highs printed by buyers. Buyers take profit. Yes, you have this aggressive pullback as sellers bring price back down to this favorable demand zone, which is the previous highs, but you don't break the overall structure. You don't break that demand zone that led us into these highs. You don't break back below the previous highs, and more buy orders are collected as that market fear is still relevant. This is the simple way the market trends, whether bullish or bearish, based on those transactions between buyers and sellers, on obviously being induced by the fundamentals and what's going on in the real world. This is exactly what we saw happen now when the week started. Because we had fear-related headlines over the weekend and further escalations, what we saw was a market gap. This market gap was enough buyer order flow to peak us back into 2,000 at that point, but not enough volume to break above there. What we had take place during the New York session was buyers take profit from the highs, sellers jump in to relieve them out of the market, a pullback that just conveniently went to retest the previous highs, collect more buy orders from a more favorable demanded price point, and all the way back to these highs right now. What I'm trying to communicate to everybody is besides the pullbacks, and you really shouldn't even try to sell the pullbacks, you should just let the pullbacks take place and wait for the better buys. There's no reason to sell gold. Even with the hawkish tone of the Feds and Jerome Powell last week saying they're going to raise interest rates soon, 25 basis points, that was just this little spike down on gold, got faded out and continued bullish. You know what I mean? So a lot of the hawkish tone by the Feds, interest rate hikes to come for the 25 basis point hike, obviously at the March meeting, that's priced in. What's really in focus is the hot war that's going on in invasion and inflation still being extremely high. Remember, the Feds have just been talking about the tapering, talking about the rate hikes. They haven't actually taken really any efficient or effective action to bring down or combat the inflation. Inflation still being high on top of the war tensions is just all the confirms you need fundamentally for bullish gold on top of the technical market structure. So simple trade ideas here on gold. We're just going to be continuing the trend. I can see some nice bullish market structure forming on the intraday time frames, and our key levels, historical key levels, being used great for collecting buy orders for us to analyze as guide points. So we can see a lot of price sensitivity here in a flat candle body support around 1981s. Even if we were to get pullbacks in these areas, I would still be looking for buys to the upside, hold 1997 buys to the upside, breaks above 2010 buys to the upside. Because the same way I'm showing you guys how the market is trending here, right? Of how you just have buyers printing highs, pullback phases that don't break the overall structure, and so forth, is the same way we're trending on the higher time frames to potentially go back to the all-time highs now that we failed to break this demand zone. Breaking out of that corrective bearish market structure, there's a lot of potential for us to drive back into the all-time highs of the 2050s here, especially when you're looking at this extremely strong bullish price action, right? So I'm just looking for pullbacks to the 1700s, talking like my boy Kerwin here in the chats. I'm just looking for pullbacks to 1981, holds above 1990. If we just create a support and order block above 1997, breaks above 2010, just looking for the gold buys, either the pullback buys or the continuation buys. Okay? No point to be selling gold with those fundamental reasons and the technical reasons. And if you do get sells on gold, yes, they can be big sometimes, but the majority of the time they're very short-lived. And when you're playing the sells and you're trying to counter trend trade, you're playing a guessing game of trying to guess where the top is going to be and trying to guess how deep the pullback will be, because gold is a vicious beast. When you're playing with the trend, it's very easy. But when you're trying to counter trend trade, you don't know how large the pullbacks are going to be or where you're actually going to reject. If it's going to be a 50 pip pullback, a 10 pip pullback, 100 pips, what price sensitivity area you're going to retest, that's hard to figure out. But when you're playing with the trend and you have buyers print these highs and you have pullback phases to more favorable demand zones, you know, playing with the trend, as long as structure doesn't break and the fundamentals are the same, you can keep playing the target to the previous highs and expectations of extending higher in the bullish market structure, right? So my expectation now is either a short-term pullback and continuation, or with the amount of liquidity we already generated from this price grab at previous highs and the momentum we're developing, if we just hold above this resistance zone technically we're observing, it's just going to burst right here. You know what I mean? But what you have to understand, I understand what you're talking about, Al Hanouni, that you thought with interest rates and QE that gold would be selling, but those interest rates you're talking about are US interest rates. And the interest rates you're talking about with the 25 basis points, that's been known for months. It's already been priced in. We've been hearing about them wanting to hike rates soon for the last 6 months. The market moves on anticipation. Investors move ahead of the curve on the rumor alone, not the actual data or news itself of the actual interest rate release. So the Feds have already been warming the market up to the rate hikes to come. That's been priced in. And what I want to tell you about the fact that it's US interest rates is the US interest rates will have more of an impact on the US dollar compared to gold in this situation, because we have global tensions active. The global tensions of a Ukraine invasion, right? Of Ukraine being invaded holds a lot more weight for investor sentiment than just US interest rates. Does that make sense to everybody? Gold, even though you're trading XAUUSD, gold is a titan in the financial markets, a global precious metal used in industry, traded globally, hoarded by central banks and countries. It's not just solely impacted by the Feds alone. Yes, when there's not many other things going on in the market, the Fed's interest rates and the Fed's sentiment will hold a lot more weight, right? But in this situation, when we have an active war, that's going to hold more weight in gold impact than the individual impact of interest rates at the moment, right? The only way we see gold drop aggressively with interest rates from the Feds is if the Feds do surprise rate hikes. Everybody expects them to do a 25 basis point hike. They come out of the blue and do a 75 point basis hike, right? So anyways, gold, bullish bias, looking for those buys, pullback buys, breakout buys. GBPJPY. I see a high probability on the higher time frames on GJ with the current strength. I want to show you guys something on the higher time frame. This will blow your mind. Monthly chart, right? This bearish trend line. Every time we've hit this bearish trend line, just as for us to observe technically as manual retail traders, it's just specific price points of interest. But every time we've hit this area, major fundamental catalysts have come to the scene that bring market fear. Here, 2008 financial crash. Here, Brexit and the first invasion by Russia and Ukraine, 2015, 2016. Here, Russia tensions starting to come back into the table where we're rejecting with potential to drive back down to these lows if the fear continues. Right? So before we were expecting GJ to continue bullish when the pandemic was fading out and we had obviously UK interest rate hikes coming up so soon. But now, as soon as we hit this very specific price point of interest, right, we're seeing new tensions come to the table globally, which is the Russia invasion of Ukraine, which can go on for months. And that's obviously, understanding market sentiment in the short term, going to keep your risk currencies weaker. Japanese yen stronger as a safe haven currency, US dollar stronger, your equity markets weaker. It's not just the US 30. Look at the UK stock market now dropping from its highs. Look at the German DAX. Look at Australian Stock Exchange. Japan, US 30. Right? So when I see this aggressive profit taking by buyers in the stock market due to the fear, it shows me that the confidence in the UK markets is going down, which can also lead to weakness in the British pound, right? Due to the current fundamentals. And you can see this theme is taking place globally. Stock market regions across the board. The fear isn't going to stop anytime soon, and interest rates are coming up too, right? So on GJ here, especially when we're looking at the daily time frame, a lot of potential for us with the current market structure and price action, at least to drive down to this demand zone, 149 first target. Okay? Then, this is still a great range for us to play higher time frames. 200 pip drop. Give or take, we have a pullback, because you know GJ does aggressive pullbacks. You know what I mean? But at least it looks like we're coming down to 150, 149. This demand zone, though, is a very, very key make or break price point. Okay? Yes, we can potentially see the range to come down to here, but if tensions continue to stay hot, if UK equity markets stay weak, yen picks up strength, we will bust this demand zone finally. Because you have to think about this from an investor perspective. We've been holding this demand zone the same time the UK equity markets have been very, very bullish, right? UK equity markets here, go to the daily. But now we're seeing a lot more sellers pressure ever since the pandemic crash. This is probably the largest drop we've seen on the UK equity markets rather than anything else. Exactly 7. 7 understands, right? So this, even with like the Delta variants, the Omicron variants, the lockdowns, we never saw a drop this aggressive on the UK equity markets. Same thing, German DAX. The fear is very evident. The profit taken on the equity markets is very evident. The shift in tide with the market fear is obviously very evident. Okay? So with GJ, we can see the new daily candle doesn't have much of a lower wick. I would like some type of pullback. You can see the same repetition I'm looking for here is this. Higher time frame supply zone area, which was that monthly area I was telling you, conveniently retesting that higher time frame bearish market structure. You start to create some stronger bearish market structure from those highs. You have this bit of a consolidation drop. Bit of a consolidation drop. Pull back, collect more sell orders, drop. Pull back, collect more sell orders, drop. Pull back from this area before having a continuation down to 149 again. Okay, so seeing some minor pullbacks here before continuing back down to our 149 targets would not be out of the ordinary with how we understand GBPJPY behaves and how it trends. But right now, the structure is very nice and bearish. And I'd still see, even if we get pullbacks to these price sensitivity areas, potential sells. So as long as the market fear holds evident, Japanese yen holds strength individually, even if we came up to 152 again, this price sensitivity area, which from this low printed by sellers, right? This is the last price sensitivity area where more sell orders were collected from a market maker institutional perspective that led us into these lower lows here. For us to see any chance of a higher time frame pullback, we need to clear above that price sensitivity area where this price is maintaining the integrity of bears in control, even if you had another pullback to there. Okay? So even if we had deeper pullbacks to here, I'd still be looking for sells. But right now, what I'd much rather have is 151.5 sells, breaks below 151 flat sells. But I'm just saying, even if we did get a deeper pullback to this area, I'd still be looking for sells. I would not get shifted out of my bias. Look how many people, how many technical only retail traders who don't know the fundamentals think this is a support forming here. And then they start buying, oh, a support, oh, the bullish candles. No, you could retest a sell area multiple times, generate more sell liquidity, and still continue the trend. Just because you might be consolidating doesn't mean it's a support or buyers taking over the market. Okay? So GJ sells at these red boxes. Deeper pullbacks 152, otherwise 151.5, new daily candle, continuation back down, break below 151, continuation sells. Our dollar pair should be very easy for you to understand. What is the current structure of the dollar individually, and what is the fundamental bias on the dollar? Quick pop quiz in the chat. Spam the chat. What is the current technical bias on the dollar? Buyers in control. And what is the current fundamental reasonings the dollar is bullish? Okay, now, technically bullish. With the rate hikes coming, hawkish Feds, that's just the bullish extra bulls for the dollar. Economic data has been stronger and been rebounding. That's bullish for the dollar. Dollar is also a safe haven globally, so you're having more pooling into the dollar. So during the war tensions, right? Buyers continuously printing higher highs, extending this upside. Now, because the dollar is the world reserve currency, if the dollar is this bullish, what does everybody expect now that without even looking at the EURUSD chart, without even looking at the GBP USD chart, without even looking at an AU chart or an NZD USD chart, what are you expecting on those pairs? With just understanding the current fundamentals, that your equity markets across the board are weaker. Australian stock market, Euro stock market, UK, that the dollar's extremely bullish, that market fear is stronger. You don't have to even look at the chart yet. You know it. Who said up? Mid-brain trading? Everybody roast this man. Change your name. You're low brain, small brain trading. Idiot. All right. Anyways, everybody, everyone who said sells bears, you're right. EURUSD bearish. GBP USD bearish. Sellers consistently printing lower lows. You only have short-term pullback phases where those pullbacks are to collect more sell orders in the market after sellers take profit from the lows. So let's break this down. Dollar strength is what's evident. Weakness in GBP against the dollar. Sellers consecutively printing lower lows. As they print lows and make money on that change in price on the drop, you see sellers exit out of the market, buyers jump in to relieve them out, creates these pullback phases that go to retest previous supply zones and continue overall bearish, right? What we can see now is a very, very clean break below the previous lows. Very strong sellers momentum as well. Okay? So on GBP USD, we're looking for sells. I'm looking to retest previous low sells in this lower time frame bearish market structure that's forming. I gotta put the key levels up for the chat as well. Sorry, everybody. You guys gotta watch this. These are key level alerts for the private chat, not for you guys. Don't worry, don't worry. Last one here, quick. We're gonna have probably have a meltdown soon. Okay, so. Oh, you thought about Dixie midbrain? Okay, midbrain, I apologize. You were still in the first question. You said Dixie is bullish. Dollar is bullish. Fair. Okay, fair. Everybody apologize to midbrain if you roasted him. I apologize. I'm sorry. If we break above 131 here, I can expect a deeper pullback to retest bearish market structure and the previous low areas here. This is the previous lows printed by sellers, which would line up very well with this bearish market structure here. Okay? I'm going to be looking for pullbacks to 321 sells, breaks below 3085, or if we just do a minor pullback, hold below 31 sells. Playing the dollar strength, weakness in UK equity markets, fear tensions from the war, weakness in risk currencies. EURUSD, same idea. Sellers printing new lower lows, very strong sellers pressure, very strong lower time frame bearish market structure forming. If we broke above 1.093, I'd see some short-term pullbacks, but overall dropping for better sells. Euro as a risk currency is weaker. ECB has been a lot more neutral, and even any of their hawkish sentiment has just been a short-term upside move that gets faded out. Dollar strength is what's dominating. Bearish market structure, sellers consecutively printing lower lows. Bearish price action. Yes, we can get some minor pullbacks, but it's easier to wait for the pullbacks, let it complete, take the sells from those better price points, or the continuation break sells. No point fighting the fundamentals. No point fighting the trend. No point fighting the dollar strength. USD Cad. We're more in a bullish bias on USD Cad here. But what we can see is very interesting is even with the US dollar strength, why hasn't USD Cad been extremely bullish? Pop quiz. USD against the Canadian dollar. Why has USD CAD been ranging so aggressively? If the dollar's so bullish, why isn't USD CAD going to the moon? Yes, if you said oil, burner, Charles, Kenny Mota, Coding Deep, Hardeep, George, everybody's right. Remember, there's a very, very strong, man said freedom convoy. Everybody's right except for Bikram. Everybody's right except for Bikram, who said Freedom Convoy. It's not the Canadian dollar is not strong because the Freedom Trucker Convoy, Bikram. That was good though. Remember, one of Canada's main revenue sources is the exportation of crude oil from the Alberta oil sands. Okay, so whenever there is whenever there's a huge amount of strength, a huge amount of upside in oil, this directly correlates to more strength in the Canadian dollar individually, okay? So you can see that's why we've had this aggressive ranging. Even though the US dollar's been strong, you've also had oil extremely bullish above $100 a barrel, right? Which would give more strength to the Canadian dollar. So fundamentally, you have this tug of war between buyers and sellers. No clear one-sided volatility of what currency is stronger than the other. But nonetheless, technically we're still holding more bullish structure. I am expecting us to revisit these highs because the dollar still dominates. Yes, it's been messy, but it's still holding more bullish. So pullbacks to 276 buys, breaks above 28300 buys. Also because Trudeau's partying with Bojo. Correct. Now, last but not least, U.S. stock market index. I just said thought market index. U.S. stock market index. Social media ruining my mind being on YouTube. Sellers consecutively printing lower lows. Market fear and huge profit taking from all-time record highs at 37K. Very strong bearish market structure. Any short-term pullbacks we've had get faded out with sellers back in control. Here you can see we had a very strong supply zone at 34K where we saw more liquidating of buyer positions and short orders flooding the market with potential to target these lows printed at 32K flat, especially if we remain below 33,500. So another good confluence of this is of course the US dollar strength and the volatility index being a lot more bullish. So I am more on the short side of the US stock market index in US 30 and expecting us to at least target these previous lows. I'd be looking for pullbacks to 33,200, 33K sells, breaks below 32,600 sells. Gold dipping, gold probably dropped 30 pips, but you're a hyena retard, George. So you don't know what the fuck is going on. This shit's mind-blowing to you. But to us, this is just another day in the jungle if you're a lion. If you're a lion, you don't get all excited. You don't get all fucking amped up seeing gazelle grazing by. That's just normal food. You're used to it. But when you're a hyena, you're fucking act like a retard. Alright? I don't want to hear nothing gold dropping. Gold bullish as fuck. Man said, hey everybody, gold dropping. This little red circle. Alright? Gold's not dropping. Okay, everybody. Thank you for attending this webinar. Thank you for your support. We went through, let's go through it again. We went through some news headlines over the last couple of sessions for anybody who wants to double check that. We went through key fundamental points that are in focus. We went through some market sentiment analysis looking at US dollar, Japanese yen, volatility index, global equities. We understood what economic events we have on the docket, which really isn't too much. And I gave out analysis fundamentally and technically on gold, GJ, GU, EURUSD, USD Cad, and US 30. Trade ideas across the board. Remember, I'm not always right. Even though I'm right a lot of the time, I'm not always right. Do your own due diligence, be smart, follow your trading plan, follow your risk management plan, control your emotions, don't be a hyena, don't be a retard. I love you all. I'll see you all on Wednesday for the scalping session. You can watch this again as you wish. All right, everybody, take care. Have a great day. Make sure you check out the 1 minute analysis on GJ. Follow the Capital Hungry Twitter. Check out the YouTube videos, tons of analysis. And yeah, check out all the resources, all right? I'll see you all next time.